how India may react and how long the world will also shudder because of the Greek no. Sanjeev Prasad, Senior Executive Director and Co-Head at Kotak Institutional Equities, is joining us now all the way from Singapore. Good morning, Sanjeev. Thank you very much for joining us today. First up, really that question, Asia is showing deep cuts. Do you think India should be preparing for some cuts? Especially because we were the ones who rallied the most in the last 3 weeks or so.
See, I won't be surprised to see, 1 to 2% downside if we don't see an early start to the renegotiations between the EU and Greece. But having said that, this looks like this is going to be a pretty protracted affair. It's not going to be sorted out anytime soon. And obviously the positions on both the sides have significantly hardened. More important, politics will play a much bigger role in the resolution of this issue. Keep in mind the fact that the Tsipras government cannot, go back to the Greek public with a deal which is any worse off than the last one, which obviously didn't sign on. And clearly on the other side, I am not very sure those people are going to give any concessions. So I suspect this is going to be a pretty messy affair and it will take a long time to resolve. Any side bending to the other side's will be construed negatively as far as politics is concerned in each of the respective, geographies. So it seems like, it's a clash between democracy in Greece versus democracy in the rest of EU in a way. And I think whenever politics, mix with economics, usually politics triumphs. So that's the worry over here. Now coming specifically to India, so far the market has been ignoring some of the, I would say, mild concerns which were there in the last rally. The first one to focus on is really the fact that the monsoons have not been great in the last 2 weeks, and currently we are pretty much near normal, zero surplus deficit as of now compared to a pretty large surplus just a couple of weeks back. So just keep an eye on that in the next 2 weeks. Result season will start this week and looks like another weak quarter. We are looking at 1% growth in the BSE 30 index. And lastly, let's see whether the government can do any or push through any legislative agenda in the forthcoming monsoon session of Parliament. Again, looks like the battle lines are drawn over there.
Sanjeev, hi, morning. I take your point completely about the Greek uncertainty and the fact that it could be a protracted affair. Just talking about what the slightly medium-term implications could be on global markets, because, what this possible exit has done is question the mere notion of the European Union's irreversibility. So now there are talks of, the possibility of further other countries exiting as well. Do you think that global markets will have to price in this sort of a redenomination risk?
First of all, let's wait and see whether Greece itself exists in the first place. That's not a given as of now. So let's not extrapolate into other countries, taking equally hardline stances, and getting out eventually. But having said that, do keep in mind the fact that we have elections coming up in both Portugal and Spain, which are probably economies not in the best shape as of now. And of course, any political platform now running on an anti-austerity program, may have chances of, coming to power in those countries. So that's what I was saying, the political risk out here is much more than the economic risk. Greece by itself hardly, contributes to 2% of European GDP. It doesn't really matter in the scheme of things. But let's see, what is the domino effect, if any. So I hope, at some point in time, this issue gets resolved favorably in the sense, Greece still continues to be part of the EU and we don't see, further negative impact as far as the Eurozone is concerned. So let's wait and see. It's early days yet, I would say.
Okay. Are you expecting, Sanjeev, that until then we should continue to see the risk of in Asian markets as well till this clarity emerges about whether Greek is in or out?
For some time, I would assume so, and then local factors will start playing bigger roles in each of the respective markets. So as I was saying earlier, in case of India, you will have to focus on the domestic factors like monsoons, monsoon session of Parliament, earnings, so on and so forth. So Greece will have its ramifications, but I don't think it's going to be something which will be the talking point for the next 6 months or so. It will do its bit for this week, and then it will be on a slow burn, I think, for some time.
Well, okay, let me then come to the Indian level itself. We've been watching this practically 3-week rally in the Indian markets. You think at 8,500 things have gotten priced enough, and we may find a firm roof over there?
See, the market is not cheap. If you look at Nifty 50 or BSE 30 index, both of them are trading at about 18 times the free float basis for March 16. So clearly valuations are on the higher side. And if you build in some of the risks which we talked about, eventually translating into some cuts in earning numbers, then you're looking at a market which is even more expensive. More important, when you look at the valuation by sectors, then most of this growth stocks that you want to own in India are very expensive. So that's where the problem comes, that how much more rating can happen in India at this point in time. Looks very difficult under whatever we are seeing as of now in terms of the Greece referendum not being a favorable outcome as far as global markets are concerned, and on the local issues in India not being sufficiently supportive, I would say. So in that case, we are looking at a market which is probably going to face some resistance at current levels. You could see 1 to 3% correction quite easily.
Okay, talking about individual sectors, Sanjeev, the sector of the year clearly has been the oil marketing company space. So all of those stocks are up about 30-40%, and now with further fall in crude prices and of course the decontrol of diesel, things just seem to be getting better for them. Do you still believe that there could be more gains in store in this sector?
In the short term, yes. This quarter we will see pretty good numbers for all the companies because refining margins have been good. There would be some advantageous gains given the fact that you had an increase in crude prices during the quarter, and there's always some sort of a lag effect between the time companies buy crude and they sell the refined products. You get some uplift in margins straight away because of advantageous gains. Having said that, one of the things which the street is probably not factoring in correctly is the level of marketing margins last year. If you look at the normalized marketing margins, if you just adjust the reported EBITDA for all the one-off items last year in terms of advantageous losses which were there, or inventory losses which were also there last year, and forex-related items, whatever, then it looks like the reported EPS of these companies were well below the normalized EPS, and which is what is exciting this market. But if you do the math further, it looks like the marketing margins were very high last year, which are clearly not sustainable. So I think the street is probably extrapolating the fourth quarter numbers or last year's full year's numbers into sustaining forever. And that's where I think there is, at least we are somewhat more conservative on the level of marketing margin these companies will earn eventually. And to some extent, after the first quarter results come out, I think it's probably time to book some profits over here because our calculation suggests that the normalized EPS of this company is far lower than what the street is looking at currently. So be prepared for some disappointment after the first quarter numbers.
The early June levels of 8,000 you think will be respected?
Hard to say about all these things, Lata. These are, all numbers only, who knows. But look at it this way, there is nothing sacrosanct about a 16p or 18p. As of now, the market is trading at 18p. It can very well go down to 16p if things don't work out well globally or in India also, in which case you're looking at a 10% correction, which means the market could be somewhere in the region of around 7,500, 7,600. So, market has moved up over the last 20-25 days, not on anything concrete, I would say. There was initially some excitement about monsoons being, better than whatever were the grim forecasts of the IMD. But beyond that, there has been really no trigger for this market to move up so much in the last 2-3 weeks.
Okay, well, final question. I get the sense you're not buying now because you think valuations are tall. Will you buy at 8,000? If yes, what?
See, I don't buy based on, indices. I buy for a 3, 5, 10-year view. You buy the good stocks whenever you can, So the more important thing is, choose the right stocks rather than, trying to, time the market too cutely. So basically, any investor has to look at good quality compound stories. If you get them at the right value, you pick them up. At this point in time, the only compounding stories which I really like are the private banks. If I look at the consumer names, they are very, very expensive, and I would be a little bit concerned about some derating which will eventually take place over there. Other than that, automobiles also look somewhat fairly valued. So among the, the good compounding stories, I think it's only private banks which excite me currently.
All right, Sanjeev, thanks for joining us and taking us through your view on the entire Greek situation as well as on what stocks one should be looking at. But we'll take a short break. When we return, top trading strategies lined up with Sudarshan Sukhani.